Hello and welcome to August 3rd, part 2. Alpha's PG is 112%. Yes, let's pick up there. So there we are, PG 112%. Let's go look at that chart and see what our plan of action is going to be there. As we saw a quick review in their first videos, we adjusted KR to the 3-to-1 ratio to lock in any profit in case there's any reversal here and pick up that profit. Again, I don't worry about it too much. If we get knocked out and we pick up a new option that goes maybe to November or December, it's okay because we picked up some profit to knock down this ode, and the scanner will give that opportunity back again. So there we are. Now we're here at PG, and I can't see the 3-to-1 ratio because the trade is so old. So we're going to go to time frame and come up here, and we'll go to time frame. We'll go to June 1st. That should cover us. And daily, and there we are, and there it is. There is our, so now price is just crossing into the third ratio. So we're going to hold off anything about taking advantage of that third ratio and get the 5 or 6 ratio as we saw earlier on KR. But we are at the first ratio, 137.60, and we are at 112%. And there's our Elvis shift rules for August. Quick review on them also. That we start off with the initial stop of the first ratio, our risk to our reward, and then when price has cleared the gantry, such as right in here, we now go to EP stop, and then when price clears the first ratio right there, we then go. Now remember this, we didn't initiate this rule until after August. So this rule here was not, this was not a July rule. Now it's an August rule, and now we are initiating that 137.60 right there. So that means we would have been taken out here for a small profit and then got right back into the game. As you can see here, the EMA is inclining, is up climbing. So is the stochastics RSI, and we have green bar on the bottom to confirm the entry. So 112 for PG. Now that takes us now to RTX. So let's go see what's going on with RTX. And RTX did clear its gantry. We do have a gantry there. And you can see the price has come down. We have a hammer in the middle of the cycle, which is a nice indication that maybe possibly going on up. Again, we have not cleared that first. I'm going to take away this earlier 3-to-1 ratio so it doesn't get me messed up. So our 3-to-1, our first ratio is here, so we need price to establish somewhere in here. So we'll go put a little triangle right in here as a reminder that we need price to be in this zone, so we can go to 3-to-1. We can go to the first ratio. So RTX has not qualified for its first ratio exit. That only at 18%. McDonald's. Now, McDonald's is an interesting subject because why? In the news, it was really interesting that MSN News reported that McDonald's was having sales were up in store after store sales. And it was like, that's kind of weird because we're experiencing downturn. All right, so we have cleared the gantry. You can see here we have cleared this gantry. So now the price, the entry price, which was 242.20, is now going to be the new exit. So to do that, we're going to go ahead and now go and turn on our sales bubble, our order ticket bubble. We are going to make sure that it's the entry price is 247.50, 242.20 was the first stop, the initial stop up here. Now our stop is going to be the 247.50 right there, EP. So now I like to do the notes first. This is I copied the notes of the previous that fell into it, and I just go and change here to from the first third to the first, and then change this to 247.50, and go ahead and copy that. And now I'll come here to the order ticket and change the order. Again, remember that little gear over here for the conditional. And now we're going to come and change all this 247.50. And right, Correct. Greater than 247.50 because we're going. And then did you just see me there stumble? I did. I stumbled because I forgot. This is a put. That's right. This is a put. So this here has to be anything greater than 247.50 because this is a put. So there we are. And now we have our order ticket says anything above 247.50. 247.50 is right there. And this is a put. You got to remember that. If you are going to be a bi-directional trader, puts and calls, you got to remember when your trades are sitting, if you're doing a put call, you're making sure you're moving your stop down. And if you're doing calls, make sure you're moving your stops up. Very important. If you're going to just be a one-directional trader, which is nothing wrong with that. I mean, I hear this term, oh, well, you'll lose 50% of the time of not being in the market. When the market, no, the market only crashes 30% of the time, not 50. It's 70%. The market's geared for the upside for 70%. So it's only going to step. You're only going to step out and take a breath for 30% of the time. And on top of that, during the crash of 2008, 200 and something stocks still went up. The scanners would have found it. On top of that, most crashes, not all, but most crashes are V-shaped bottoms. They crash heavy, as we did with the pandemic of March 2020. And look at the raw backs. And look at the way we have roared back into position again. The bottom line is very simple. If you are going to be a directional trader, there is extremely nothing wrong with that. And all you gotta do is just worry about to the upside and look at the call side. And there are portfolio managers are up traders. They don't trade to most portfolio managers do not trade to the downside. They do not. Most are up to the upside. I know portfolio managers from my interviews being on the pension fund and also to talking to portfolio managers at the various finance conferences. The majority are upside traders. And also, they're not options traders. They're equity traders. So we risk smaller for larger gains in the option world, and that's what's going to be happening. That happens here. So here we go. 247 above. That's good. So let's go on now to gold. Gold is at 10. Yesterday, I have to apologize, guys. I did not get around to watching Courtney Smith's gold report. I'm going to go back and take a look and see what that's all about. Again, now here we go. We have cleared the gantry. Now remember, this gantry exit did not occur because we did not use the gantry. We did not initiate the gantry entry. Oh no, we didn't initiate the first ratio entry until August. So these occurred in July. Look right there. You see the vertical red line? That is the expiration date of the options. So right there, that tells you this is July 16th. So anyway, from here to here is July, and then a little bit over here is August. Well, August 2nd is right there. So August 2nd, no, that's August 20th. That's the expiration date. Then August 2nd is somewhere around here. Well, there's the second day right there. There's our first day of August when they initiated the new rules. Okay, so that said, this here is 168.40, and it's already at 168.40 first ratio, and it's going to be sitting right there. So now we're going to go ahead. Yeah, we're going to go ahead and conclude there and go on to TLRY. And real quick, we'll note why this count is still dragging behind. And that's because of the simple fact that these original date to expiration trading plans is dragging the whole account down. Had we initiated exit rules on these two, they would not be here. Yeah, we would have taken a loss, but we would have taken some loss and done and be out of it. And then all these percentages would have made up for it. But now these are still in the trade, and that's the reason what we're also behind on that. So with that, we will conclude part 2 today of PG and go on to part 3 of TLRY. Okay, and I thank you very much for stopping by and checking it out.